Hey guys, it's Konrad Bobilak here, CEO of Investors Prime Real Estate and best-selling author of Australian Property Finance Made Simple. I've made a video today talking about probably the most important topic that is linked to becoming wealthy and successful, which is psychology and mindset. And people have said over the years, 80% of success is psychology, mindset, 20% is specialized knowledge. And when you think about it, if you look at my videos on YouTube, predominantly, virtually all my videos are on the things that you need to implement, the 20% specialized knowledge that you have to implement. But I can tell you now, without the right psychology and mindset, you're not going to implement anything. And this is why psychology is the difference between success and failure. And that's why I've made this video on mindset and psychology, especially dealing with mindset and psychology issues right now amidst the coronavirus breakout, which is so important because now things get tested. Your psychology is getting tested right now, which is the difference of you investing and not investing. At the moment, just so you know, I am inundated with phone calls from doctors and dentists in the medical industry who I used to look after in the previous life when I was in banking and finance, who are buying lots of properties right now because their income has gone up substantially because they're working in the medical sector, which is obviously booming, and the pharmaceutical sector, and they're going to be paying a lot of tax. So the accountants are telling them, hey, listen, you got to buy another property, otherwise you're going to be paying 40, 50 grand more tax next year. So they're all calling me up and buying properties. Not only are they buying properties in the best suburbs of Melbourne, St Kilda, Williamstown, Hawthorn, all those areas, Brighton East, they're buying them at a discount or a really good price. And this is why, this is the main difference between wealthy people and not wealthy people. I won't use the term poor people because there's a lot more to life than money. But in terms of asset allocation, the difference between discerning investors and non-discerning investors is their ability to take action and discern whether it's the right type of investment they want to place their money into. And what I'm going to do today is show you not only what it takes to become successful and have $1 million mindset, but also I'm going to share the number one secret personally that I've been using for the last 20 years that's allowed me to create the success that I have in my property portfolio and in my life. So welcome to today's video, very exciting video indeed. Personal disclaimer, I've never met you, I've never seen you. I have no idea what your financial situation is or your risk profile. Therefore, all the information in this video is purely for educational purposes only. Do not act on anything that I'm going to tell you before seeking independent financial advice. But if you do seek financial advice from a financial planner, make sure they are property millionaires themselves. So ask them the question, how many properties do you own? Don't ever take advice from people that are broke. Just a bit about myself. My background is that I have wasted 4 years at Monash University drinking beer at the tavern and playing pool and doing assignments with international students that I couldn't stand. After wasting 4 years of my life there, being broke, by the way, I used to work at Safeway, or Woolies as it's called now, stacking shelves at night part-time. I thought, money's a good thing. I think I should make some money. I started working in funds management for Australian Uni Funds Management here in Melbourne. So I've got a diploma of financial planning, financial services. Also, I've been working in the financial services sector for the last 20 years, mainly in banking and mortgage broking, and the last 7 years in real estate. The most important thing is that the reason why I'm talking to you today, and this is the only thing that qualifies me to be here today, is that I'm a real property investor with a multi-million-dollar property portfolio that has allowed my wife and myself to have an extraordinary lifestyle. And that's the only really credibility that you need from people when you're taking advice. Don't worry about all the letters behind the name. They amount to nothing because the lecturers are on $90,000. They're all broke, 3 months away from being homeless. I'm harsh, yeah? I don't give a shit. None of them are going to invest with me. And none of them invest at all. They all end up dead broke on the pension, writing more stuff, teaching people how to stay poor. By the way, this is my book that's gone bestseller. If you want to get a copy, just jump onto my website, bookonfinance.com.au, or Amazon or Booktopia or any other good bookshop around Australia. Now, that's my shameless plug for my book. Let's get into the contents. Ask yourself this question: do you have a mindset of a millionaire, or do you have a mindset of an employee? Because ultimately, what you think about will determine your level of success. Rich people think about different things compared to poor people. Rich mindsets have a completely different paradigm system and wiring system compared to the average person. So it's important for you to understand what is the main difference in psychology and how these people think. And really, if you look at growth mindsets, it has to do with limitations and imposing limitations on yourself and your limiting beliefs, and they create your reality ultimately. So for the average person, they give up too easily. My potential is predetermined. My failure is the limit of my abilities. They've got a very fixed mindset. They believe that they're not in control of their life. There is a destiny that's been put in place, and they're just going along for the ride. They completely feel out of control. The biggest difference is control. The average person feels they have no control. Well, things happen for a reason. Bullshit. Things happen because you attracted them into your life. That's why it happened. Oh, well, that's not very fair, Konrad. You don't know my situation. It is fair because some of the wealthiest people in the world had amazing obstacles to get over. My intelligence is static, so they don't ever read. Most people don't read a book after graduating from high school. Never. You know, I remember graduating from high school, and a friend of mine who was friends with in high school, I obviously have never spoken to them since, said, gee, that was good. I never have to read another book as long as I live. I looked at him, I'm thinking, you're an idiot. And that was the end of that friendship pretty much, because I went on and read over 500 books after year 12 to my age of 44 right now, mainly on psychology and mindset. I avoid challenges. I stick with what I know. Feedback and criticism is personal. I will never improve. I'm entirely good at it or I'm not. There is no point in trying it. Successful people have a completely different mindset. Successful people think, I like to try new things. I can learn to do what I want. Failure is an opportunity and growth. There's no such thing as failure, there's just feedback. The most successful entrepreneurs in the world have failed thousands of times. Forget about hundreds of times, thousands of times. They've gone bankrupt over and over and over and over, and then they became multimillionaires and billionaires. Except Warren Buffett. Warren Buffett's the anomaly. He's actually made money pretty much from day one. They have a growth mindset. My intelligence can be developed. I embrace challenges. I learn from feedback. But feedback from the right people, by the way, who have the credibility to give you feedback. I keep trying and never give up. I'm inspired by other people's success. My mistakes help me to grow. I know that this will help me even though it's difficult. So the thing that changed my whole life was that I was very fortunate enough to pick up a book. A friend of mine gave me a book in year 12 that changed my whole life, and I'm about to share the book with you. But Jim Rohn, one of my favorite psychology mindset specialists in the world, said formal education will make you a living, self-education will make you a fortune. So if you've just got formal education, I don't care if you're a doctor or a dentist, you've got a limited amount of money that you're trading time for money, and your wealth will be very limited. You're going to have a good lifestyle. Don't get me wrong. I've got clients that are on 300,000-400,000 per year. They're very comfortable, but they're never going to go to the next level because they spend what they earn. And after going through their qualifications, they've never spent time on developing their psychology and mindset. If you want to go to the next level, if you truly want to become a millionaire, you have to keep developing your mindset and learning from other successful people. The difference between you today and where you will be 5 years from now will be found in the quality of the books that you've read. Books are the key. Books are the key. Not videos, books. There is nothing more powerful than getting a book, a hard-copied book on paper, and then reading it for 2 to 3 hours a day, and then getting through a whole novel in 7, 8, 9 days. And this is what at the age of 21, I've decided, and I had a mentor, I was very lucky to meet a multi-millionaire property developer here in Melbourne who said to me, Konrad, you can have anything you want in life, but you can't have everything. Before you decide what you want in life, you have to be able to decide what you're willing to give up in order to have that. And because I was busy working and I was married and I didn't have much time, I was going to the gym after hours, I only had about 2 or 3 hours per day that were my hours that I could use in whatever way I wanted to. So at the age of 21, 22, just when I got my first job at Australian Uni Funds Management, I decided to stop watching TV altogether. And I've never watched TV. I read the Fin Review. I definitely keep myself updated every day with financial media, but I do not watch the Idiot Box. You know, I don't watch Married at First Sight or The Biggest Loser or MasterChef or any other crap that's on there. And what I started to do is read between 9 and 11 o'clock at night. I would read for 2 hours every day. And I would find that on average, I could get through a book. I started reading real estate books initially. I could get through a book within 8 to 12 days, and depending on the complexity of the book. So I've read all of Stephen McKnight's book, Margaret Lomas, Jan Summers, Dimfna Bolholt, Michael Yardney. I've actually read every single book published on real estate in Australia ever in the last 20 years. I've read over 180 books on real estate, investing and finance, and real estate related topics. Literally every single book published in Australia. And it all started with one book, which is Robert Kiyosaki's book, Rich Dad, Poor Dad. The more you learn, the more you earn. This is from Warren Buffett, who's worth over $80 billion, so he obviously knows what he's talking about. I made my first investment at the age of 11. I was wasting my life up to till then. So obviously this guy has made more money than any other investor in the history of investing, really. And it's all about going through and fast-tracking your journey and going from point A to point B in the fastest possible way with the least amount of effort. Most people don't have a financial plan at all, so they don't actually do anything in life. They just work for 30 years, pay off one house. At the age of 65, they've got one asset paid off, and they have 150 to 200,000 in the super fund. So asset rich, cash flow poor, and at 65, the banks won't touch you. You can't borrow any money, and you're tired at 65. You don't want to do new stuff. And I wouldn't recommend people at 65 doing new things. You know, you got to do new stuff, take risks in your 30s and 40s. Once you get to 65, 70, don't do new things. Just do what you already know, because if you're going to lose money, it's going to take you years to go back to square one. Remember Warren Buffett's rule of making money. And the rule number 1 is don't lose money. Rule number 2, don't lose money. Now, why does he say that? He says that because if you lose money and go bankrupt and you lose everything, your house, everything, it will take you a decade just to get back to zero or some level of normality. And then it will take you another decade to go back to where you were. So you want to get from A to B in the least possible time frame, because ultimately time is running out for everyone. You can always get more money, but you can't get more time. The reality is most investors fail to build large property portfolios in Australia. 71.6% of investors only have one property. 0.9%, less than 1% of the investor pool have more than 6. And the reason is they have no planning. They have a buy and hold and pray strategy. This is the book that was given to me by a friend of mine on a tram in Malvern when I was in year 12. And it was a really weird title, Rich Dad, Poor Dad. I don't understand what the hell it was all about. And I was very skeptical. I've never seen anything written about psychology and mindset, because at that time I've wasted 12 years, not wasted, I've been educated in the normal system for 12 years, which doesn't talk about psychology and mindset, which is everything. And I opened up the book, and this is the first thing that I read that changed my life. Chapter 1, lesson 1, the rich don't work for money. The poor and the middle class work for money. The rich have money work for them. I've never heard that before. I've been conditioned at school to become an employee, to get a job. No one ever told me the rich do not work for money. They have assets working for them. You know, poor people look for jobs. The rich build networks. That was completely alien to me. I've never heard that kind of language before. So when I opened up the book and I read this, I went, geez, this is like completely the opposite of everything that I've been educated. I was 18 at that time, just at the end of year 12. I'm thinking, geez, this is like the opposite of everything that the school system has been teaching me. And then I read that book in 2 days, and it changed my whole life. And then I read Rich Dad, Poor Dad, second book, which is Cashflow Quadrant. And then I read all his other books. And at the time, there was about 12 books that he had. And so over the next 12 months, I literally read all the other 12 books. And I can tell you now, first year at uni, I was already over it. I could already see that this whole system designed to create employees was a scam, you know? But at the same time, I had mortgages, I had commitments, I was in a relationship, so I had to keep going, but I kept going just as far as I could until I get to a point where I can work for myself. And this was the main difference. If you haven't read this book, guys, if you're going to read one book in your lifetime, this is the book to read, and then Cashflow Quadrant will be the second book. Because your psychology, once you unlock that Pandora's box, you'll never be able to go back. You can't go back. It's like taking the blue pill in the Matrix. You can't go back. You know, you won't be able to sit there in a cubicle answering emails, taking the whole thing seriously, because it's all bullshit. You know, I've worked in corporate for NAB, for Medfin. It's all bullshit. You spend your lifetime killing yourself in a job where they can replace you in an hour. And do you think anyone gives a shit once you leave? I used to work 80 hours for Medfin, right? I used to work 6-7 days a week, writing loans, commercial, residential. And then I left because I couldn't stand the politics and my manager. Do you think anyone, when I left, would say a week later, forget about a month or a year, a week later would say, guys, do you remember Konrad? Yeah, he was such a good loan writer. He used to, you know, work all the hours, drive around Melbourne, delivering contracts. Anyone? No one gives a shit once you leave. No one. They don't even know who you were. You know, and this is the reality of what we've been taught to do. Work hard, go to school, get good grades, and get a job. Why? That's crazy. Really? How's it working for you? So this is the difference between a rich dad and poor dad. Now, poor dad was the person that's been conditioned by the system to be an employee, which is what I've been conditioned to become at year 12. The rich should pay more taxes. And obviously, there's a kind of, once you're conditioned to be an employee, you automatically, by default, you hate wealthy people because they've obviously got to be crooks. Otherwise, how do they get all that money, right? So the poor people have a psychology, oh, the rich should pay more in taxes. Study hard so you can find a good company to work for life. Yeah, study hard so you can work for and build someone else's dream, not yours. I'm not rich because I have children. I'm not rich because I don't have the time to become a business owner. I'm too busy. I've got children, I've got a mortgage. Great, that's a really good excuse. Keep telling yourself that. Don't talk about money over dinner. Why? The rich always talk about money over dinner. That is the time to discuss money. You know, the poor and the middle class don't talk about it. It's a taboo topic. Oh yeah, we shouldn't talk about, let's talk about politics and sport. Don't take risks. The biggest risk in life is to take risks. A house is the biggest asset you own. Pay your bills first. I will never be rich. Now the poor have a different mindset to the rich. The rich believe taxes reward those who produce. The more taxes you pay, the more income you're making. Bill Gates pays billions in a year in taxes. He loves it. Study hard so you can find a good company to buy, not to work for. I must become rich because I have children. I must become rich because I have children. It's your responsibility to become wealthy, either as a business owner or investor, because you have children, so you can leave them a legacy. Talk about money and business over dinner. Learn to manage risk. The biggest risk in life is not to take risks. You know, when you're 95 on your deathbed, you're not going to be going, gee, I had a good life. I never took any risks. I'm really happy that I worked all those hours overtime at the company. What was the company gone? It was 40 years ago. What were they called? Can't remember. But anyway, I was really happy. Those Excel spreadsheets that I did in the 80s, yeah, remember those? None of that stuff matters. All you're going to be thinking about on your deathbed is how much time you spent with your friends and family, and you're going to be regretting the risks you never took. A house is the biggest liability you own because it sucks your income and it sucks your borrowing capacity. It's not an asset, guys. It's a liability. You pay your bills last. You buy investments and you invest in your mindset first. I'm a rich man and the rich people don't do this. I'll never be rich. You will be rich. So the rich dad is money is power. Pay yourself first and then pay everyone else after that. And pay yourself first also relates to buying investments with your pre-tax dollars. Build businesses. Don't focus on building a career for someone else. Build your own business eventually or become an investor. Don't save, invest. Not investing is risky. It's the biggest risk in life is not investing and having the knowledge of where to invest. Your house is a liability. The rich are generous. They give away more money than ever. If you're an employee on fixed income, ask yourself, how much money did you donate to charities last year? How many children have you fed? Because I know a lot of millionaires, they feed hundreds of children per year and they give away millions of dollars in charity contributions every year. So to me, the most selfish person is an employee that doesn't give back to anyone. They just look after their own mouth and the family. Oh yeah, but you don't know, Konrad, we can't afford that. We can't afford to give away money. Well, whose responsibility is that? Remember, Steve Jobs was broke. He didn't come from wealth. These people came from nothing and they just kept on going and making a huge difference, eventually making millions of dollars. Now, I'm not saying everyone can be entrepreneurial like Steve Jobs because there are anomalies, but I'm saying everyone can become an investor. Not everyone can become an entrepreneur and build a business, but everyone can become an investor. Let money work for you. Become financially literate. That's the number one thing. Without financial literacy, guys, you're going to stay broke. This is why I wrote this book, Australian Property Finance Made Simple. The whole book teaches you just two concepts. Number one is mortgage reduction program, how to pay off your home loan in 10 years or less rather than 30, and then how to use that time, that additional 20 years you saved or 25 years, to buy 3, 4, 5, 6, 7 properties. So when you retire, you've got a portfolio that you're living on and your house is paid off, rather than doing what the system wants you to do, which is just buy one house, do a principal and interest loan and take 30 years to pay it off. Insanity. Insanity. Ask yourself how you can afford it. Don't ask yourself, see, whatever questions you ask your subconscious, you're going to get the answer. So don't ever say, I can't afford this. Yeah, I can't afford that. Yeah, you're right, you can't afford it. Ask yourself, how can I afford it? How can I afford the car? How can I afford the holiday? How can I afford the mansion? And the answer will be, well, you've got to make money. This is how much you need to make, and this is the ways you can make it. So whatever questions you ask, the answers will be given to you. So the difference between the rich and the poor is the type of questions that they ask. The rich ask high value questions. The poor don't even ask the question, they set limitations on themselves automatically, which is, I can't afford it. Make money by shopping for investments that will go up in value. Stop buying things that you don't need. Will Smith said, people spend their life buying shit they don't need to impress people they don't like. Waste of time, waste of time. The second book is Cashflow Quadrant, which is probably my most important book that I've ever read in my whole life. I would make this compulsory reading. If I was in charge, if you're in year 12, you have to verbatim memorize this book. And if you don't get it, you cannot graduate from year 12, okay? So rather than focusing a whole semester on random regression analysis or standard deviation curves, which at 44 I still have never used, this is what kids should be learning. Now, this is the difference between the rich and the poor. The rich people have multiple flows of income, different income streams. The poor people have one flow of income, and if that stops, they're gone, which is happening right now in Australia. People's income have stopped. You're working in a cafe or a restaurant or hospitality or tourism, your income stops, or your income stops. I have multiple streams of income, passive income. One of the most passive incomes you can get is become an author and write a book, and just get paid while you sleep. There's multiple streams of income. Investments pay dividends. Shares pay dividends. Stocks, bond, annuities, all that kind of stuff. Property obviously pays rentals while you sleep. Invest money first, spend money first. The poor get a paycheck, they spend everything. The rich invest with their pre-tax dollars, which is property investing. You buy it with your pre-tax dollars and then you claim your deductions and then you pay tax. Rich people focus on earning money. Poor people focus on spending money. Rich people use debt for investing. Poor people use debt for spending, and they don't understand the difference between good debts and bad debts. We'll come back in a second to cover that. Rich people have appreciating assets. Commercial property, residential property, shares, stocks, bonds, annuities, etc. Cryptocurrency. Poor people have liabilities, credit cards, store cards, everything, personal loans, car loans, chattel mortgages, hire purchase, novated leasing, and house mortgages. At the end of all that, they've got nothing left to invest in. They pay others first, They pay themselves first. The rich pay themselves first. They spend money on personal development, psychology. My rule has always been you should be spending 10% of your annual income on your personal development every year until you get to the point where you want to be. So if you're on 40 grand a year, you should spend 4,000 on personal development every year. Courses, books, consulting fees with experts, until you get to a place where you're comfortable. If you're on 100 grand, it's 10,000 per year. If you're on $10,000 per year, it's $1,000 per year. Because you're going to blow the money anyway. The worst thing you can do is buy a brand new car. And this is what I understand. This is why I had shitty cars in my 20s, right? I've always had cars for around $6,000, $7,000. And now I drive an AMG Mercedes. I've got 2 AMG Mercedes Benz. But in my 20s, I was buying cars for $5,000, $6,000, $7,000, right? Just crap cars, V8s always. that's not even negotiable, except for the first couple. But they were crappy cars. And I was looking at people spending 30 grand for a brand new Commodore, and they drive out of the dealership and it's worth 20 or 25. I'm thinking, you've just lost 10 grand, you idiot. You know, and people just do it without even thinking. Oh yeah, but Konrad, we can't afford to spend money on personal development, but you can afford it to buy a Camry for 30,000 and lose 10 grand in the first year. Wow, it's about priorities, guys. Whatever you focus on is what you get in life. So the cashflow quadrant talks about different segments, and it talks about the employee, the self-employed person. This is part of where most people work. And this is where the poor people tend to work, and the middle class. The rich are business owners and investors. Now, this is the reality of what happens, and you've got to be aware of this, because once you get this, your paradigms will shift forever. So the employee, you have a job, just over broke. You've got no leverage. You control 5% of the wealth, and the amount of active work determines your income. So you're trading time for money, you're selling time for money, and eventually get to a point when you run out of time to sell. You know, and I've worked 80 hours a week. By the way, don't get me wrong, rich people work hard and long hours, okay? Rich people don't sit at home for 2 hours. They work for 2 hours a day and they're on social media for the rest of the time. Rich people work harder than employees, but they work in a specific way, which is different. So it's not about volume of time. I remember I was hiring mortgage brokers, and the mortgage broker said, one of the employees, I was interviewing mortgage brokers when I had a mortgage broking company, and I said, why did you leave the previous job? Oh, they just expected me to work too many hours. I said, how many hours were you doing? Oh, some weeks I did up to 50 hours a week. And I looked at my manager, my GM, and I said, yeah, I remember working part-time, 50 hours a week, give me a break. I said to 100 hours a week. Self-employed people own a job. They've got no leverage. It's 95% of the population, and they also trade time for money, but they are specialists. So they're lawyers, accountants, surgeons, doctors, dentists. So they get more. The more specialized the area is that they work in, and the harder it is to get into that area. They have some level of security because obviously they're working for themselves, but also they are also trading time for money, and with that comes taxes. And also, yes, they do have a better quality of life than employees because they control more things, but they still are selling time for money, they're trading time for money, and eventually they run out of time to trade. The rich are business owners. They own the system, they leverage. They control 95% of the global wealth. Business owners, company directors. Their income doesn't depend on active work. They leverage other people's efforts. They're leveraging employees so these guys can build their dreams. Remember, as an employee, you're either building your dream or someone else's dream. And as an employee, you're always building someone else's dream, which is the owner of the company you work for, or the board of directors of the company that you work for, or shareholders. Investors, which is a very small part of the population, own an investment. The income doesn't depend on active work, and the money works for you. So they're leveraging money, borrowing money to buy assets that appreciate in value, and they make money while they sleep. Now, not every employee can become a business owner, okay? Not everyone has the psychology and the skill set to become an entrepreneur, but every employee can become an investor. Every employee can become an investor. Every person that works full-time in Australia, as long as they qualify for a loan, I don't care if it's $200,000, you can buy a house in Bendigo or Ballarat. There's no excuse, guys. If you're broke, it's because of your decisions and indecisions up to this point in time. It's that simple, okay? You're the only one that you got to blame. Don't blame others for your circumstances. Self-employed people also might not have the ability to go to the next level and exponentially grow the practice and list it as a public company and or grow it and multiply it by 1,000 times. But self-employed people, doctors, dentists, lawyers, architects, they can still become investors. So some of you can become entrepreneurs, which is very rare, but everyone can become an investor. So E and S, you have to become investors. It's the only way you're going to become wealthy, and you're going to stop trading time for money and having money work for you while you sleep. And the reality is, Kew in Melbourne, for example, is one of the top growth suburbs in Australia. In the last 25 years, listen to this, the average house in Kew has gone up by $200,000 per year. The average house in Kew has gone up by $200,000 per year. I can guarantee you, most people in Kew do not make $200,000 per year. So you can have your assets earning more money for you while you're sleeping. That's the difference between knowing where to invest and not knowing where to invest. So as an employee and self-employed, you have to transition either to a business owner and eventually, investor. But this is where you want to be operating out of predominantly. And this whole thing changed my whole life. So why is it that so few people succeed in any investing type? Is because their paradigms, their belief systems, they've got limiting belief systems that they impose on themselves. And whatever you believe, you achieve. If you think you can't do it, you're right. You can't do it. If you think you can do it, you're right as well. That's the reality. So your belief system is based on your ability to evaluate something. Your ability to evaluate something is your ability to discern whether this is a good investment or not a good investment, and it has to do with two types of analysis, technical analysis and fundamental analysis. And to gain knowledge in technical analysis and fundamental analysis, which is basically my YouTube videos, I've done over 60 videos on these two topics, you've just got to spend time researching and reading and absorbing information. There is no shortcuts. There is no shortcuts, guys. It just takes hours and hours of reading and knowledge. Your current results are an expression of your level of awareness. So wherever you are currently in life, I'm talking about your bank balance, the amount of property you're controlling, I'm talking about the financial buffers that you have in your life are currently a direct correlation to your level of awareness that you've chosen to cultivate because of your decisions and indecisions in your life. No one puts a gun to your head to watch MasterChef. You can read Kiyosaki books. You can go and subscribe to his courses. Every time you got a paycheck, you've got a decision to make whether you spend it on clothing, bills, or personal development. No one's going to put a gun to your head and say you have to buy clothing. You have to buy the latest runners and t-shirt and clothing because otherwise you won't be cool, right? No one's doing that. So remember, you're in control of what you're doing with your money. And the best money you can always spend is to increase your level of awareness. Because remember, in your knowledge base, there are things that you know about property. There are things that you know that you don't know. There's a lot of stuff you don't even know that you don't even know. And this is keeping you broke. Ignorance is not bliss, guys. People say ignorance is bliss. No, that's the dumbest saying ever. I want to find who that person was originally that said that. It's just the dumbest thing. But ignorance will send you to the poorhouse. People say, but Konrad, personal development is expensive. I can't afford $4,000. You think personal development is expensive? Try retiring dead broke at 65 on 150 grand. That's expensive, all right? The money that you're going to spend, you're going to blow everything that you earn anyway. Most people live from paycheck to paycheck, let's face it. So whatever money you're going to earn over your lifetime, you're going to spend anyway. It's just how you spend your money and how you use your time that determines your outcome. And this is why I've made this video, because I want to just impress upon you that you've got to start making better decisions on your life, and the more quality decisions that you make and the more resources that you funnel into a specific area, the more results you're going to get in that particular area. So imagine your current level of awareness in property investing goes from that to that, and then eventually to that. So your level of awareness and your comfort zone expands to encompass the things that you don't understand. That's how you make money. The higher level of awareness, the more psychology and your mindset changes, and then eventually you just incorporate the things that you don't know into the things that you know, and you know whether to take action and not to take action, which means the difference between investing in a property and not investing in the property. It's a difference between buying a house in Point Cook, which is not a good idea, versus buying a townhouse in Bentley, which is going to outperform Point Cook 2-to-1 every year. Same price. You know, 700,000, 750, two bedroom in Bentley, 4-bedroom house in Point Cook. But if you don't know how to analyze the opportunity, if you haven't got the level of awareness required to crunch the numbers, to use the property investor analysis software, to access RP data, you won't know that Point Cook will underperform just above inflation, and Bentley townhouses have growing at 8 to 9% per year. The information is available for everyone, guys. No one's hoarding the information. They want you to have it. I'm giving it away for free on my videos. So the question is, how do I expand my level of awareness? I'll show you how do you do it practically, and I'll show you from a psychological perspective. It's effective education combined with professional mentoring, if you can get it, over a reasonable period of time. Now, education is books, webinars, digital courses, live courses, interacting with consultants, interacting with other investors. And it starts off with books. And then you subscribe to webinars, and then you get to live events, and eventually your whole network changes around you. You know, your people, your network will determine your net wealth. People ask me, what's the best way to become wealthy? Hang out with wealthy people. Oh yeah, but I don't know any. I know. But if you start reading books and going to seminars and start interacting with consultants like good accountants, lawyers, after 5-10 years, you'll meet some. But you got to start the journey. And the journey of 1,000 miles always starts off with an upfront cash payment. There's no deferred payment plans, guys. It is painful. You just got to do it. Learning curve has 4 distinctive stages. First, when you start investing in property, you're unconsciously incompetent. You don't even know what you don't even know. You're a danger to yourself. You know, and this has to do with the amount of hours of exposure as well. Then you become consciously incompetent. You become aware of how bad you are when you start losing money. When you buy Docklands apartments, or when you buy a 4-bedroom house in Trigonina, Tarmeet, and go, gee, I've made no money in 5 years' time, and I've wasted all this money on the interest. That wasn't a good thing. Then you become consciously competent by saying, maybe I shouldn't have bought Trigonina, Tarmeet, maybe I should have bought Ormond, McKinnon, or Williamstown, or Brunswick, or Carlton, or Collingwood, or East Melbourne, and a smaller property. And then eventually you build a large property portfolio and you're consciously competent. You don't even know what you're doing. You don't need to articulate what you're doing. You're just doing it. You're kicking targets because you spent hundreds and thousands of hours mastering a particular area. And all it takes is time and dedication in one area and you just got to master it. So what's the main difference between the average person and the educated investor? And I can tell you one thing about networks. If you ever want to classify people around you, and this is one of the activities that I really urge you to do right now, is get a piece of paper and write down the top 10 people that you've interacted with the longest in ascending order by hours in the last 12 months. So who do you hang out with, basically? Who's your network? Your best friend, second best friend. Go down the list. Write down the list of 10 people you interact with. Some of you will get to 4 people, 5. I actually don't have that many friends. I'm a bit of a loner, you know, single child from a broken marriage, and I'm an introverted person by nature. So I've got my 6, 7 friends, and that's about it, you know. But that's all I hang out with. I don't have time for a lot of people. I'm happy spending hours by myself. You know, that's why all the sports that I do, kickboxing, powerlifting, shooting, I've got a handgun license. I don't like team sports at all. You know, I just like things me versus me. Write down who they are in ascending order, and now write down when you talk to them, what is it that you talk about? Because I can tell you one thing. This is from Socrates. Strong minds discuss ideas, concepts. Average minds discuss events, what happens in the media week by week, day by day, and weak minds discuss people. She said this, he said that. They're always permanently offended by someone. Now, if you want to build a strong network of people, and if I look at my top 6 friends, all of them are multimillionaire property investors and they're in their own business. So my accountant, my lawyer, 2 of my friends are lawyers. I've got another friend who's a real estate agent, owns his own company. There's an architect, and there's 2 property developers. They're probably my top 7 people that I hang out with. All of them are multi-million-dollar property investors. They're multi-millionaires, they own their own business, but they always talk about ideas. They never talk about what's happening day to day. They don't talk about Trump or the media. Very rarely they talk about that. And if you try to get them to talk about people, forget it. They're not interested. It's beneath them to talk about what she said this, he said that. It's all bullshit. All they talk about is concepts, the property market, the economy, developing, opportunities, where money's being made, where money's being lost, where are the risks. It's always concept, concept, concept. So what you want to do is tally up the people in your life that are high-level thinkers. They discuss ideas. Keep them. People that are average minds discuss events. You can either cut them off the list, but eliminate anyone that talks about people. Cut them away. They will never become successful. Their whole life is going to be structured around she said this, he said that, I can't believe they did this. And these people are completely, totally immersed in getting permanently offended. They're always a professional victim. Oh, you don't understand. She did this to me. Now I've got to do this. Now I've got to go that. They're the people that write letters to Telstra complaining about services. They're the people that write letters to, Arnott's barbecue shapes, that there wasn't enough barbecue biscuits in the little box, and they spent 2 hours writing a letter. These people eventually end up dead broke at 65, alone in a dark room somewhere, okay? I'm sorry, it's being harsh. Get rid of these people. Cut them out, all right? Get rid of them completely. So what you want to focus is accumulating people that have strong minds, because they will propel you to the next level. How can you soar like an eagle if you're surrounded by pigeons? The best advice I can give you guys is, in your network, you want to be the poorest, least knowledgeable person in your network. By far, by far. If I look at my network of friends around me, all of them are multiple times more successful than I am. Not talking about twice or 3 times, 100 times more money than I have, 100 times more success. One of my friends has a publicly listed company in the stock exchange. Another one, he's got property portfolio virtually 30, 40 times bigger than mine. They're the people you want to hang out with. You want to be the poorest in your network, because then you can go to the next level. If you're the smartest person in your network, you're in trouble. You're in trouble because you can't grow. And all that's going to happen is the others will take you down to their level. That's what they'll try to do. They'll sabotage you. On a conscious or subconscious level, they'll drag you down. By the way, I'm only doing this, I'm giving this information like if I met myself when I was 20 and I had to have this really tough discussion with my version of myself at 20, this is what I'll be telling myself. So some of you will send me an email, I can't believe you said that. Straight into the delete box. The average person avoids and fears investing. It's too hard. They buy things that cost them money. Latest clothing, latest technology. They have bad debts, credit cards, personal loans, store cards, chattel mortgages, novated leasing, always the latest car. They pay full tax and they complain, can't believe we've got to pay another 30 grand in tax. So terrible. They get advice from friends and family that are completely broke and uninformed. Mum, you're broke. Where should I invest? Oh, don't invest. It's a risk. Great. Thanks, Mum. Dad, you're broke. Where should I invest? Son, investing's risky. Yeah, it's all rigged, mate. It's all rigged. Don't invest anywhere. You'll lose money and the market's going to crash. Great. Let me ask my broke accountant. Jim, you're broke. You're an accountant. You're working from home. Where should I invest? Oh, definitely stock market and managed funds. Property market is going to crash tomorrow. Whole world's going to hell. They work harder, pay more taxes, and they lose opportunity and time because you can't create more time. You can always give away as much time as you have. And they procrastinate inaction because they have no knowledge. They're operating ultimately, the average person operates from a place of lack of knowledge, lack of financial literacy. The educated investor knows they must invest because they can't make money. They can't become wealthy by working and saving. It's impossible. They buy things that make them money, commercial property, residential property, things that pay rent, and they appreciate in value. Even property trusts, unlisted property trusts, stocks, bonds, annuities, anything that pays dividends. They use good debt. They know the difference between good debts and bad debts, which we'll cover in a second. They minimise their tax legally. I know plenty of wealthy people that pay zero tax. Do you know the majority of tax in Australia is paid by the middle class and the poor? They pay most of the tax. The top 2% rich people pay zero tax. Legally, zero tax. They get advice from experts and specialists that are also successful like themselves. Not people that are qualified, by the way. There's a big difference between someone just because they did a diploma in something versus someone that's actually implementing and getting results. Huge difference, guys. You know? I mean, I see all these experts now on Instagram and LinkedIn, all these training experts on YouTube. And it's like, have you ever even lifted? Like, if you're a personal trainer, by the way, this is a message for personal trainers, guys. I don't give a shit what you're doing in personal training. If you don't deadlift 200 kilos, 200 kilo deadlift, nothing special, bench 150 kilos, and squat 180 kilos, you should get rid of tear up your certificate, your VicFit certificate, go back to wherever you came from, okay? You've got no business training anyone. That's like minimum prerequisite to become a personal trainer. I look at some of these kids, I'm a personal trainer. Can you even bench one plate? Who says you're a personal trainer? It's craziness. Advice from experts. Same with accountants, financial planners that are broke, living from paycheck to paycheck, selling products. No property behind them, one house or renting, giving advice about property. Who told you could give advice about property? The government? Jesus. Get your money back. The rich use opportunities, take time, and they take action because they come from a place of knowledge. They come from an empowered place. They know how to discern and make an educated decision between a good investment and bad investment. And that's why with my second book that's coming out very shortly, Australian Real Estate Investing, I've actually broken down the whole process of building a large property portfolio into 4 things. Number 1 is having the right psychology. Psychology is everything, guys. Psychology is everything. Without psychology, there's no implementation. There is just paralysis of analysis. Developing the right plan and system, you've got to have an outcome. Starting point, outcome. Buy 12 properties over 10 years. Buy 5 properties over 10 years. Whatever your income is, it doesn't make a difference. Buy 1 property over 10 years. Starting point, outcome. Written down. You've got to have the right experts, people that can implement that strategy for you. You can't do it yourself. You've got to get the right mortgage broker, the right lawyer, the right property strategist, everyone in your team. And then you've got to have the right selection methodology. Understanding which are the good properties, which are the bad properties, which I've done plenty of videos on this channel, in the past. When these things are synchronized, that's the definition of success. But without psychology, there is no starting this journey. Without this one, there is nothing. These are irrelevant without this one section. And that's why I've made this video just on psychology. And remember what happens, the herd mentality is, they go up and down. You know, bear markets, bull markets, they just go up and down, and there's panic, and they sell at the bottom and they buy at the peak. They always get things wrong. Now, your relationship with debt will largely determine your level of success as a property investor. Wealthy people have a positive relationship with debt, and they distinguish between good debts and bad debts. Poor people group all debts as bad. You got to pay everything off. No, you don't. You do interest only. You never pay things off. So good debts are defined as tax-deductible debts used to purchase and leverage assets which appreciate in value. So, for example, a line of credit used to trade shares, margin lending, a redraw facility to use to buy investment properties, commercial, residential, interest-only loans used to buy investment properties. So you're leveraging other people's money, the bank's money, 95% leverage or 90%, pay lender's mortgage insurance, not a problem, it's tax-deductible. And then the interest, the holding cost of that money is tax-deductible. That is good debt. Bad debts are debts which have no tax deductibility, which means you're buying assets that depreciate in value. And the only exception for that is your home, because your home appreciates in value, but it's still not deemed as an asset. An asset puts money in your pocket. Your house doesn't put money in your pocket. It drains money from your pocket because you're the only one paying for it. And then you're paying upkeep and maintenance as well. But the biggest use of bad debts is credit cards and personal loans, and this whole generation now of instant gratification. We want it now generation. I want the brand new car. I want this. I want that without even working for it. Guys, save your money after you finish school, go to uni, don't have a car loan, don't do anything, buy with cash, get a mortgage, and then get your car loans, because the hardest thing is to get a mortgage. Car loans and credit cards and store cards are easy to get. Mortgages, very difficult. So get the mortgage first and then go to Harvey Norman and get the interest-free furniture and then the car and everything else, not the other way around. So there's a massive difference between the psychology of a sophisticated investor and the average person. The educated investor focuses on building equity, building debt, increasing good debt. Building wealth through property is about debt accumulation. It's taking on mortgages in an asset called property, which only grows at 8 to 10% per year. So the true aim of a property investor is to maximize the amount of money they control, which is the amount of lending they control. If you want to make $1 million, it's simple. Borrow $1 million right now, put it into a property and wait 10 years and you've made $1 million. There's nothing to it. Imagine trying to save $1 million after tax. Impossible. Impossible. No one's going to save $1 million. I'm talking about normal income earners on 70, 100 grand a year. Try saving $1 million in after tax money. There's no way. So the aim of property investors is really to leverage other people's money in a growth asset called property. Now imagine your psychology was so stuffed up that you don't distinguish between good debts and bad debts. How are you going to justify taking on more debt? I said, this is why people are paralyzed right now in Australia and the whole world. If they haven't got the psychology now, they won't invest in property because they think, well, I don't want to take out a new mortgage because there's risks. Yeah, there's a risk for you because of where you are psychologically in your financial standing. See, when I was doing my diploma in financial planning at Australian Uni Funds Management, I used to believe there was such a thing as market risk. I don't believe there is any market risk at all. I think it's all with the individual. You're the risk. Your level of knowledge or lack of level of knowledge determines your risk. There is no market risk. The market has zero risk, literally. Now, a lot of people disagree with me. I don't really care. I know people make more money in a downward falling market through options than in an upward trending market. So where's the risk? You know, it's all about perception and level of skill. And remember, if you look at cash flow, this is why the rich always grow equity. They never grow cash flow. The rich always grow equity because they know equity can be taken out and used for cash flow. The poor always will replace their income. I'll give you an example. This is an example of a $300,000 purchase on the property. Now, if you buy a property at 10% capital growth, it will give you around 4% rental yield over 10 years. If you buy a cash flow positive property, it will give you 4% capital growth and 10% rental over 10 years, right? It's the opposite. So year one, you buy a property for $300,000, it's worth $330,000, and obviously you're getting rental of $1,300 and $13,200. Now, a lot of people tell you, replace your income first. So if you buy a growth property and it's giving you 10% rental yield, you've made $31,200 in the first year. Great. So you've got a property somewhere on Airbnb, right? Now, the rich don't do this. The rich always buy these properties. It's only the poor that chase replacing their income because they think, well, 31,000, a few more of those, and I'm out of my job, right? I've replaced my income. Look what happens over 10 years. In year 10, this property is $778,000. It's giving you $31,000 in rental at 4%. This property here is going at 4%, so it's $440,000. And then it's giving you $44,000. You're still a little bit in front, but after 20 years, the property here that's going at 10% is worth $2,018,000, giving you rental of $80,000 per year. This property is only $657,000, giving you a rental of $65,000. Growth properties will outperform cash flow positive properties long term, both in capital appreciation and in rental yield. Both in capital appreciation and rental yield. Focus on this part of the market, not this part of the market. Can you do both? Yes, you can, absolutely. But don't just focus on cash flow, otherwise you'll never have any. You've got to focus on building equity because the equity will enable you to buy more properties, more deposit money. These properties, you'll be waiting for years to get money out of these properties to buy more property, and you can't save deposit money. It's impossible. Well, it's not impossible, but it's very difficult. Anyone who lives within the means suffers from a lack of imagination. Leverage, it's all about leverage, guys. Property itself doesn't give you a very good return on the asset, but it gives you a massive return on your equity. And there's a difference between return on asset, return on equity. I get contacted all the time by people saying, Konrad, what's your highest return that you get on your properties? I said infinity, because I bought property with no money down and I've made $1 million. So I don't know, I've put no money down and make $1 million. That's an infinity return. What are you getting? Oh, we're getting 12%. Okay, bye. So let me explain to you what I mean. So let's say you have a growth in yield of an asset 11% and interest is 7%, which is the average interest rate over the last 50 years, by the way. Forget about this 3-4% we're getting now. And it's going to stay low for a long time, but let's say 7%. And you've got $100,000 to invest. Now, you've got no debt. So the first one, you're not borrowing any money, right? Because you think, oh, debt is bad. 100 grand, you're not borrowing money, there's no LVR. 11% return, you've made 11% net return, and cash return is 11%. So return on equity is 11%. Then you're borrowing 50%. 100, you've borrowed another 100, so you've got a 50% LVR. So you're controlling now $200,000 of the asset. 11% on 200 is 22,000, but you've borrowed another 100 grand at 7%. So 22 minus 7, 15,000 return, 15% return on equity. 11% return on asset, that's a consistent figure, but 15% return on equity. Let's say you're borrowing 80% LVR, which is property. $100,000, $400,000 debt, 80% LVR. So you're controlling now $500,000 worth of the asset. 11% on 500,000, $55,000. You've borrowed 400,000 at 7%, which is 28,000. So 55 minus 28, 27,000. You've made 27% return on equity. Here we've got 90% LVR, 47%. So 90%, you make 47% return on equity. You've made $47,000 on $100,000. That's why when people say property only grows at 10%, the stock market's growing at 12%. Yes, but I'm not doing, when you do property, you borrow 80% minimum. You go 90%, 95% if you can. So I'm not interested in return on asset, I'm interested in return on equity. It's all about return on equity, guys. Now I've got properties with no money. I've got a video actually that I've showed you, that I've created on YouTube, 5 ways to buy property with no money down. So zero in, $1 million borrowing, 100% leverage. You've borrowed, so you've made $110,000, 70% in costs, $40,000 return on zero, which is infinity. Infinity return. Try that for a return. Try that as a conversation next barbecue when someone says, I'm getting 12% of my portfolio. What are you getting? I'm getting infinity. Infinity? What does that mean? Well, no money down, lots of money out. Can't be real. Well, it can't be real for you because you don't know what you're doing. This is the secret of building a large property portfolio, guys. It's all about leveraging. It's about getting equity from your home, deposit for your next one, deposit for your next one, refinancing, getting the next property. This is how you build your portfolio. You can't save deposits every time. And all the deposit, everything is interest, tax, the interest on it is tax deductible. That's how you build your wealth. It's about leveraging other people's money in property. Now, what is my number one secret of success? Which I promise that I'll share with you at the end of this video. And this has made me more money than anything else. And it's this notion of 10,000 hours. I have read over the years, and I was really fortunate enough that I've read this when I was in my 20s, that it takes about 10,000 hours to master an instrument. Like if you want to play the piano or a guitar or a saxophone, whatever your thing is, it takes about 10,000 hours to master that instrument. Pretty much where you're playing, professional level. Same thing with flying choppers or planes or anything you want to master. You need about 10,000 hours of exposure and practice. Now, when you start off investing, the more exposure you have, the more knowledge, the more time you spend on educating yourself in a given area, the larger your comfort zone expands. So your comfort zone starts off very small with no knowledge, and the more you learn, you start encompassing things outside your comfort zone, which become part of your comfort zone. Oh, I understand this now, I know how it works, I'm comfortable. That's what it means. So at the beginning, your comfort zone, wherever it is now, you've got a comfort zone. You've got boundaries to how much you currently know and what your reality is based on. And you feel very safe and comfortable and in control in the comfort zone. And people live in the comfort zone virtually the whole life. Very rarely do we step outside the comfort zone. When you step outside your comfort zone, you feel uneasy. You can literally, people feel sick physically sometimes. They can't sleep at night. Oh, I've bought this thing, it's going to go, gee, well, I've done the right thing. When you step outside the comfort zone, first you have the fear zone, which is lack of self-confidence, find excuses, and be affected by others' opinions. I have a lot of clients through me, Konrad, I want to invest in property. Great. But my wife doesn't want me to invest. She's scared. She's concerned. Okay, great. What do? We'll get her educated because she's a rational person. She's got no knowledge. How many hours has she spent researching the market? None. She's too busy looking after the kids and working. Well, if she wasn't, she's in the fear zone. She's got no information to go by. Therefore, she wants to preserve what she has. Therefore, the only rational decision that she can make is don't do anything. Put the handbrake on. So you want to go 100 k's an hour and she wants to put the handbrake on. And she has her right to do that because she's a rational person. To me, a person that acts with no information is a crazy person. So obviously any rational person with no knowledge, no education, cannot possibly come to a conclusion, I'm really scared, I don't know anything about the property market, let's just throw all our money in there and risk everything that we have. Are you serious? Like that's a scary person, right? So my advice to those people where one partner wants to invest, the other one doesn't, the partner has to come up to the same level of awareness as the other partner. And what if they can't? Upgrade partners. I'm kidding. Don't upgrade partners, all right? It's an option, though. It's an option. I'm just saying. Once you go through the learning curve, you go through the learning zone where you're acquiring new skills, extend your comfort zone so it starts growing, dealing with challenges and problems. And eventually, if you keep educating yourself in a given area, which is the 10,000 hour segment here, you find purpose, live your dreams, growth zone, set new goals, conquer objectives. Now, this is how the 10,000 hours works, okay? 10,000 hours of exposure in a given area. It doesn't have to be property related, guys. It could be anything. It could be painting. It could be sculpturing. It could be anything that has a technical aspect to executing a particular thing, which is property investing. It's a system. It's a very structured system of knowledge. You need 10,000 hours to complete mastery. Now, 10 hours, which is what the average person has, is no action. You're in the comfort zone. Yeah, we're not going to invest now. Let's see what happens with the corona thing. When it blows over next year, maybe we'll come back into the market. Complete, no knowledge. Why would you invest? Anyone that's investing with no knowledge, it's almost a crazy person to me. So yes, the average person won't invest. They'll just wait and see when everyone comes back into the market. By that stage, it's too late. 100 hours of exposure. So maybe watching a few programs of renovations, reading a few articles, talking to a few people. 100 hours is nothing, by the way. This is accumulated over years. You're in the fear zone. And what happens is you take action, but most of the time people take the wrong action. Well, we have to do something. We don't know what to do. Hey, these apartments in Docklands look really nice, especially the ones overlooking the water and the casino. Let's buy one of those. No. Ooh, Queensland Gold Coast properties. That sounds nice. We can even go there for a holiday when they're not being leased out. Worst decision you can ever make. Oh, let's buy a house and land package in Melbourne. I hear land's going up, buildings depreciate. Let's get a nice big 750 square metre block. 3% growth per year, okay? Disaster. All the house and land packages. So when you have 100 hours, my advice is not to do anything, because if you do something, chances are you're going to make the wrong decision and actually lose money, unless you leverage into a network. 1,000 hours in the learning zone, the biggest thing you'll learn in 1,000 hours of exposure in property investing is you can't do it yourself. You have to have the right network supporting you, which means even though you haven't got the necessary skills and you're getting them, you can see what the outcome is. You can see the end of where you need to be, and you know the gap between your knowledge and where you need to be. But the biggest thing you learn is you know you have to get the right property accountant, the right lawyer, the right mortgage broker, and you know what questions to ask them in order to get the right advice. So if you get the right network here, you'll actually be successful after 1,000 hours of exposure, which means also reading maybe 10 books on property, going to some live events, webinars, digital, online educational courses, And then you go, yeah, I know we have to find areas that are inner city, high income growth areas with high income demographics, not with low income demographics, in the school zones, next to the water. In Melbourne, it's the Bayside and the eastern suburbs, predominantly. So that's where you actually will make some growth. 10,000 hours, you're mastering. You've done it. Now, 10,000 hours means over the last 5-10 years, you have consciously made a decision to expose yourself to 10,000 hours of contents. I can tell you now, by that stage, you're untouchable. The media can't touch you. The articles of doom and gloom can't touch you. You know how to discern between economists that are full of BS, and economists that know what they're talking about. You own that space, guys. You know exactly what's happening. Think about the industry that you're working in, whether it's IT, medical. You know your industry back to front, your segment of the industry that you're working in. If someone came in externally and started writing articles about your industry that you're working in for the last 20 years, you know what's BS, what's real, right? If you're a bus driver, tram conductor, whatever it is, a flight attendant, you know that space perfectly because you spend 10,000 hours on the job, right? That's where you have to be psychologically with property investing. You own that space. No one can infiltrate your psychology because you know what it is. You've been there for 10,000 hours. You know the reality of your industry. That's where you want to be with property investing. Once you get there, you're going to make a lot of money. Now, what does it take to do that? It's 80 hours per day, 5 days a week, 52 weeks, which is 4.8 years. So, if you work this is why I've spent my whole career working banking and finance, financial planning, real estate investing, because I knew I wouldn't have enough time outside of my work hours to learn about property investing. So I've chosen all the industries that are related to property investing so I could fast track this 10,000 hours. Now, if you're working as a farmer in the middle of nowhere, you're not going to be able to spend 80 hours a day, 5 days a week, 52 weeks a year working in the Melbourne real estate market or Sydney real estate market or Brisbane real estate market to get to the 10,000 hours. So the question is, Konrad, we can't do 10,000 hours in the industry. You got two options. Number one, act without knowledge and lose money, or leverage yourself and get a mentor or get someone that's done it already and can help you do it. So find someone that's done 10,000 hours and use their expertise to do it. That's it. There's no other option, guys, because you can't, unless you want to replicate this, what's the alternative? There is no alternative. There's no shortcuts to getting 10,000 hours of exposure. You're either going to get it and be successful, or if you're not going to get it, you're going to find it hard to become successful. It's that simple. And it's to do with anything to do with investing. So as you progress through the comfort zone and you get more hours of exposure, your growth will occur where your comfort zone will keep expanding, and eventually you're in the growth zone, which is a 10,000 hour zone. So for me, this is the number one secret of my success, the practice of essentialism. Now, you've probably never heard this word before, some of you have. Essentialism is basically focusing on the things, the 20% of the things that give you 80% results. It's the 80-20 rule. I would say it's probably the 2% of the things that will give you results, eliminating 98% of things that are not giving you results. So basically, what it is in a nutshell is saying no to virtually everything except for the things that will get you closer to your goals. That's why it's important to have your goals in writing. So let me explain this in more detail. Non-essentialism, which is majority of the public, 98% of public have no direction and they get blown around like a paper bag in the wind. They think all things to all people. I have to, it's important, it's all important, everything's important for me to do and find out about. How can I fit it all in? Oh, I'm going to do everything. Cryptocurrency, Amazon, I'm going to do eBay, I'm going to do stock market, property market. Within property, I'm going to do buy and hold, renovations. I'm going to go into a regional, I'm going to go Airbnb. Good luck with that. The undisciplined pursuit of more reacts to what is more pressing. Say yes to people without really thinking. Everyone's coming at you with ideas. Hey, do you want to try this? Yeah, sure, that sounds good. Are you getting results? Great, let's do it. Tries to force execution at the last moment because they get so busy they can't keep up, and then they start doing things last second. They live a life that does not satisfy, take on too much and suffers, and work suffers. They get tired. They're doing stuff. They're reading everything. They're reading 10 books at once. How to sell treadmills on eBay, how to do drop shipping on Amazon, how to do this, how to do cryptocurrency, how to do renovations, how to do subdivisions, how to buy land in mining towns, how to buy land in Bulgaria. Don't buy land in Bulgaria, by the way. I don't know if it's good or bad. And if you're Bulgarian, don't send me emails, okay? I don't care. They take on too much and work suffers. They feel out of control. If unsure whether the right thing to get done and feels overwhelmed and exhausted. Now, essentialism is basically I choose to do the following things and exclude all others. Only a few things really matter. What are the trades-offs? So the disciplined pursuit of less. I have a disciplined pursuit of less. In my life, it's all property investing. And if anything comes in the way of property investing, I just don't do it. That's why I say no to every opportunity. Everyone comes at me every day, Konrad, I've got a network marketing company. No, thank you. Great company, not interested. Konrad, can you do this? No. Konrad, have you thought about selling these properties? No. Konrad, are you interested in house and land? No. Konrad, can you sell properties in Brisbane? No. Konrad, can you source properties in Perth? No. No. All day, I just say no to everything. Not interested in anything except building my property portfolio and my powerlifting. That's it. Anything else that is outside of those two goals, I eliminate. And that's why I've spent 10,000 hours in property investing, and that's why I've got the results that I have, and 10,000 hours in powerlifting. Reading books on powerlifting, talking to powerlifting trainers, coaches, strength trainers, supplements, specialists, everyone. I've chosen the path, I've walked the path, and I've eliminated all the other paths. This is the secret to success. It's just working hard in one industry, in one pursuit of one specialized area. It's the disciplined pursuit of less. Pause to discern what really matters. Say no to everything except the essential thing. Say no to everything. No. Learn to say no to people. On LinkedIn, I get opportunities every day, especially from growth experts. Hi, I'm a growth expert. I said, okay, David, I only deal with exponential growth experts, so I can't deal with growth experts. I'll go to the next level. If you have exponential growth expertise, then I'm definitely interested. So then I get contacted by exponential growth experts on my business. And I tell them I only deal with exponential growth experts that have a parabolic exponential growth potential. Otherwise, I'm not interested. What is an exponential growth expert? These titles that people give each other these days, it's ridiculous. I just say no to everything. No, thank you, no, nothing. Eliminate virtually everything. Life that really matters. Choose carefully in order to do great work. Feel in control. I'm always in control. I'm a control freak. Get the right things done. I prioritize. The books. This is why I've published this book, because I've locked time every Friday for the last 10 years. For the last 10 years, since 34 to 44, on Fridays I write my books. And if I don't get inspired on Friday to write the book, I don't force myself, I just go do other things. But I've blocked out time every week, a set amount of time to write my book, and I've got my second book coming out now. How many people out there would love to get published, but they just don't have the time? If you don't make the time, you will never have time. That's the reality. The only way I can do Fridays and write my books is turn the phone off. Not open up my laptop. I open up my laptop at 5 o'clock. Just not available. No to everything. If I was just available on the phone and on email, I wouldn't get any work done because people would just offer me opportunities. Hey, Konrad, we've just found out that dumbbells made in China are going to sell really well in the Australian market because everyone's going to be training from home. Not interested. What about gym equipment importing? Not interested. Hey, there's a restaurant that's going down. You can get it really cheap. Not interested. And then at the end, you have joy and satisfaction. So this is why in my life and other successful people, I have noticed that they practice the notion of essentialism, which is the disciplined pursuit of less. Focus on what's really important to you in your life. Eliminate the rest. Warren Buffett says, make a list of the top 10 things that are most important to you in your life, what you want to accomplish. Write them down from order of most important to least important. Now, focus on the top 4, eliminate the last 6. You don't have time to do it all. That's reality. So I've just focused on 4 things in my life. One of them being investing, and other things are personal stuff and sports. and relationships and so forth, and having family time and holidays. That's why I have 6 holidays every year. I just book them out, pay for them, even 12 months ahead, and we just make it happen. Do you know Australians are notorious for never taking holidays? Because we always go, oh yeah, we'll see what happens, and you get busy. I'm always make it busy, but if I pay for it 12 months ahead of time and I will lock it in, I just know I have to go, otherwise I'm going to lose the money. Right? So you just book it out and just go, and I've never regretted that. So if you don't do that, this is what's going to happen in your life. From A to B, you're going to be going all around, trying all different things, and having no results at the end. Focus on the things that matter. Say no to everything else. And this is what your life will be like when you're building your property portfolio and your net worth. Steve Jobs, it's only by saying no that you can concentrate on things that are really important. Say no to virtually everything, guys. That is the secret. Get through the 10,000 hours as quickly as possible. That's where the money is. Focus on reading books and getting exposure to people that are wealthy and smarter than yourself, and that's what's going to get you the results that you truly want. If you don't do those things, if you sit at home every night watching MasterChef and Married at First Sight, 5 years from now, you're going to be the same person that you are today. If you're not happy where you are, and if you don't expand your level of awareness, if you don't read books, if you don't turn the idiot box off, 5 years from today, you're going to be in exactly the same situation you are right now. Because I can guarantee you, if you've been watching the idiot box, not reading and not expanding your awareness, 5 years ago, you were in exactly the same situation that you are right now. So if you're unhappy, you have to change. Nothing will change unless you change things. It is that simple. Make a decision. I hope you enjoyed this video. If you're interested in learning more, by the way, there's a home study link that I'm going to give you just below, which is my home study for the Real Estate Investing Fast Track Weekend, which was recorded in 2015. It's absolutely free, and it's basically 10 hours or 12 hours of content plus other webinars with a huge manual. It's easy to navigate through. You just point and click and you watch it, and you download a manual as well. And it's absolutely free access, nothing to buy, just pure contents. And you get the 265-page manual as well. So for those of you who are interested in furthering their knowledge for free, no strings attached, this is one of the best things you can watch, and it's free, guys. I mean, I wish I had this information when I was 20, packaged up in a beautiful online home study with a manual. Will save me decades of trial and error. That's it from me, guys. Hope you enjoyed this video. This is Konrad Bobilak, and I'll see you on the inside.